Hey there everyone, Dave Keller here with Market Misbehavior. Today we're going to talk about the pullback in the growth leadership names. So we've been covering the major indexes, the S&P 500, the Nasdaq 100, approaching overbought conditions. As of Friday's close, the Nasdaq 100 came out of that overbought condition, suggesting a bit of a short-term pullback. The S&P 500, on the other hand, finished the week in a position of strength, staying in that overbought condition. So what gives? Why the difference between the two? Well, it's all about the mega cap leadership names, those technology and communication services names that have really been doing the lion's share of the gains in 2023. Today we're going to look at the chart of the S&P 500, but focus in on the leadership growth sectors like communication services and technology. We'll look at two individual names in those sectors, and then we'll talk about the different scenarios that I outlined in a previous video for the Nasdaq 100. I'll share with you my own percentages that I think in terms of allocating probabilities to each of those four different scenarios. Before we get to these charts, a lot of great charts to talk about here. Would help me a lot if you'd like the video. Subscribe to my channel while you're here. We'd appreciate that as well. And also, here's one more thing to tell you about. Today's video is brought to you by Seeking Alpha. I'm a big fan of places that allow you to better understand the market environment. I think seekingalpha.com is certainly one of those. When you go to the website, I would check out the stock screener, particularly because it allows you to use Seeking Alpha's proprietary quant model. In my experience working with institutional investors, we always had what's called an alpha model, or a quantitative model, which really modeled the characteristics of strong companies, demonstrating strong growth prospects and strong price momentum. Seeking Alpha does a really good job of taking that institutional level quantitative capability and putting it in the hands of individual investors. If you go to marketmisbehavior.com/seeking alpha, or just click on the link in the description below, you can go right to a special offer. If you use the link, you get $50 off your first year and also get a 7-day free trial to check everything out. So go to marketmisbehavior.com/seeking alpha. Now back to the video. All right, so here we're looking at the S&P 500 retesting the 4,600 level. Now, if you remember, that was the end of July. Not quite making it to the all-time high around 4,800, but getting pretty darn close. From there, we have this 3-month decline, lower highs, lower lows, kind of a classic pullback phase going into the low at the end of October. The last 4 weeks have been lights out uptrend, right? With the S&P having very few down days, the Nasdaq and a lot of growth leadership names really propelling stocks to retest resistance. Now, the S&P 500 finished this last week right below 4,600, right at 4,595. And so we're literally testing that resistance from a couple months ago. Now, what are the chances that the S&P powers above that level? Well, I would argue it has a lot to do with the leadership. Now, if you think about it, on Friday's close, the Nasdaq actually finished about 0.5% higher. The S&P finished a little bit further than that, but the growth was underperforming the value leadership, or more of the cyclical leadership. Here are the sector returns just on Friday's session. If you look, real estate was number 1, followed by industrials. Utilities was number 3, materials was number 4. So besides consumer discretionary, the top half of the list all kind of value, cyclical, defensive types of sectors. So the reason why the S&P really led on the way, and certainly the Dow finished stronger than anything, was because of the sectors that were leading, particularly real estate and industrial. Now look at the bottom of the list today, or on Friday, and you see communication services and technology. Now both of these finished slightly higher, about 0.2%, but far underperformed the sectors at the top of the list. So when you have this configuration where value is outperforming growth, which granted has not happened a lot in 2023, you sort of get this discrepancy or this divergence between the S&P and the Nasdaq. Now, why is the Nasdaq pulling back a bit while the S&P is finishing strong? Well, look at some of the larger names in the Nasdaq 100, and that will tell the story pretty well. Here's Netflix, obviously a mega cap name in the communication services sector. You can see Netflix is testing its July highs over the last couple weeks. Really, this incredible run after the gap higher in October, pushing higher and higher and higher, not quite getting to 500, and as a matter of fact, stalling out right at those July highs. At the end of the week, we actually finished a little bit lower. Netflix actually had a down week. The RSI was up to 80 about a week ago. Now we're back below the overbought condition. So this is suggesting, at least in the short term, stock like Netflix is pulling back after having the run higher. And it's not just Netflix. Look at Alphabet. This is another one of the biggest names in the communication services sector. You can see Alphabet's actually testing resistance around 140 for the third time. We first reached that level in mid-September. We tested it again in October. Really failed to follow through above that resistance. Gapped lower and then pushed higher with the other growth stocks. But again, look how it's unable to get above resistance. So when a market is stalling out, stocks are able to trade to resistance, but not through resistance. So you see Alphabet having a down week as well, pulling back. So again, while the S&P and some of those value sectors actually finished the week pretty strong, the growth stuff actually underperformed and actually had a down week in the case of Alphabet. Look at the momentum on Alphabet, by the way. In a bullish phase, the RSI tends to stay above 40, particularly on pullbacks, and gets well above 60 on a rally. In a bearish phase, you get the opposite. You get the RSI getting down to the oversold conditions, and when you have the bounce higher, the RSI doesn't get above 60. So in the last month and a half or so, Alphabet has actually rotated based on its momentum characteristics from a bullish phase that has been the story for most of 2023 to more of a bearish phase. So if the growth mega cap names look like this, highly unlikely the Nasdaq 100 is going to be able to power through its own area of resistance. Now, if we look at the QQQ, you'll see what happened here, right? We had the rally in the first half of the year really going through the July peak. Then we had this pattern of lower highs and lower lows, kind of a downtrend channel. We broke out of that channel in early November. This gap around 380 to 385 was pretty meaningful because that actually gapped right to the previous highs in July. And you can see for now, we've remained above that 385 level. So we're remaining above that high from July. We're not quite to the all-time high, which is here around 400, slightly above there, but that's kind of where we're at. Now, the QQQ became overbought about a week and a half ago, and from there has kind of come down a little bit. And again, the weakness in the QQQ really reflects the weakness in some of these mega cap growth stocks. Now, this gets us to a series of scenarios we outlined about a week and a half ago. We posted a video on our channel here, and I have a link in the description below if you missed it, where we laid out 4 potential scenarios for the QQQ and asked you to think about those scenarios, which one you thought was most likely and why. So if you've not watched that, hit pause, go on another tab, open that video, click on the link below, go to that video, watch that one first because that'll outline these 4 scenarios. If you had watched it, just to catch up your thinking, just to refresh your memory, we outlined a very bullish scenario, which would be the QQQ over the next 6 to 8 weeks, so basically taking us into mid-January, making new all-time highs. So the very bullish scenario means the QQQ above 400, right, in the beginning of January. The mildly bullish scenario would involve us remaining between around 380 to 340, and the 380 level comes from that gap that I mentioned from a couple weeks ago, right, from mid-November. So the mildly bullish scenario means we essentially hold that gap. Maybe we trade briefly below it, but overall, about 6 weeks from here, we're kind of still in this range. The mildly bearish scenario means the gap does not hold and we actually trade lower, but we don't undercut the October low just from about a month and a half ago, right? So we hold 345. The super bearish scenario means we plunge lower. December is unseasonably weak, and we get down below 345. And at the beginning of next year, we're talking about the Nasdaq 100, really in a clear downtrend phase. So what were the probabilities you assigned as you think about those 4 different scenarios? Let me tell you what I'm thinking. So process of elimination, I would say the super bearish scenario, highly unlikely. I usually allocate at least, I stick to big round numbers, so I go with at least, in bits of 5%. So 5% is the lowest. I would never say something is a 0% chance because there's always a possibility of some extreme outlier event kind of happening. But I would say the very bearish scenario with us ending up, below 345 in 6 to 8 weeks, it's about as close to a 0 as you can imagine. So while I agree to put at least a 5% rating, I would say 5% is the most I would allocate to that. And again, I see that as highly unlikely. Given the seasonal strength that you have in November and December. November was very strong. December tends to be strong as well. Usually have strength going into the beginning of the year. January often can be, where some of those November, December rallies can cool off a bit. Now, what about the very bearish scenario, or the very bullish scenario, right, with the Nasdaq getting above 400? So the reason why I would allocate that a small percentage to, and I give it a 10% chance, we'll call it. The reason why it's not more than that is because of the run that we've had so far in November. One of the basic premises of technical analysis, really market analysis, is that when you have a big move, you have to recover, right? I always talk about the big meal, the Thanksgiving dinner, and then you have the digestion day, or the digestion period, right? You don't have a big meal at Thanksgiving and then have another big meal that evening, right? You're kind of on the couch, comatose, watching football, just trying to like let it all digest. So you always think about a big move and then you have a digestion day. That's why the market often has a big move and then a corrective phase, or even just a time correction, just a time to sort of reset where buyers and sellers sort of recalibrate their expectations based on the previous move. So the very bullish scenario, getting above 400, just given the fact that we've had the rally, given the fact that things are overbought, and I would expect a brief pullback here, I would say getting above there in the next 6 to 8 weeks, probably unlikely. So 10% chance I would give it. So that gets us to the two that I would see as the most likely. I would give a 25% chance to the mildly bearish scenario. I see it as a certain possibility, and I don't want to say it's not a possibility. I think there's a healthy chance that we kind of get in there. The reason why I would say it's a relatively low percentage, though, and only 25%, that might even be generous, is because of the seasonal tendencies. December actually tends to be quite strong. So I think if we do get a bit of a pullback, I would expect buyers to come in, especially around this gap, right? If names like Alphabet and Netflix roll over, if other growth stocks start to pull back, they've been such a great bet in 2023, and given the seasonal strength, the fact that interest rates remain so low, I would expect buyers to probably come in if they see any hint of weakness, because anyone that missed out on this rally in October and November is probably desperate. There's going to be a lot of FOMO, and so if we pull back a little bit, I would expect some buyers to come in and push it up there. So I would say only a 25% scenario that we don't hold and sort of end up down in this range. And that, of course, leaves us with the scenario I basically was pitching just a moment ago. I give it a 60% chance to the mildly bullish scenario, sort of this, ending the year, beginning January between 380 and 400. I would say, given the strength that we've seen and given the seasonal strength, I think December probably is a pretty strong month, but I wouldn't be surprised if the first half of December is a little weaker. The second half of December is where we get into sort of that Santa Claus rally period. You usually rally going into the end of the year. The last 5 days between Christmas and New Year tend to be quite strong, so wouldn't be surprised if you get a little end of the year strength, setting us up for a January where we're basically talking about the likelihood of us breaking to a new all-time high in the first quarter. So those are the outlined. I've outlined the different percentage probabilities that I would assign based on my analysis. And again, what's great about this sort of probabilistic analysis approach that I'm describing here is it forces you to think about those different scenarios, right? What would it take for the Nasdaq 100 to break above 400, the QQQ? What would it take for the QQQ to get below 345 in the next 6 to 8 weeks? Maybe unlikely scenarios, but they're possible. And by thinking about what kind of stocks may lead or lag in those scenarios, how your portfolio might weather those conditions could better prepare you for any scenario that we actually see play out over the next 6 to 8 weeks. Thanks so much for watching this video. Don't forget to drop a comment below. Tell me, out of these four, do you agree with my percentages or were you assigned different ones? Drop a comment below and let me know. For Market Misbehavior, I'm Dave Keller. Be well and stay safe. We'll talk to you again soon.